Hello viewers, welcome to my channel. I'm Hasham. So in this video I'm going to explain you about the auditing, the appointment of auditors. So the subject auditing, already I have uploaded 4 videos on unit number 1, which contains the meaning of the term auditing, definition of auditing, evolution of auditing, and objectives and importance of auditing. Then what are the different types of audit, standards of auditing, and the procedure for issuing the standard by AASB. All these things I have explained in the last 4 videos I have already uploaded. If you have not watched, I suggest you to go to the playlist of my channel. Select the subject auditing, watch the first unit videos. Now I am going to start the second unit. In this unit, the topic of the unit number 2 is auditors and execution of audit. In this, the contents of this unit are: first, appointment of auditor, then qualification and disqualification of auditor, qualities of auditor, remuneration of auditor, rights and duties of auditor, then civil and criminal liabilities of auditor. These are the topics regarding auditors. Then execution of audit, we have commencement of audit, engagement letter, audit program, audit notebook, audit workbook, and audit markings. These are the topics for execution of audit. So these are the contents of unit number 2 I am going to explain in the coming videos. But in this video I am going to explain you about the appointment of auditor. So before explaining about the appointment of auditor, you just to take a screenshot of this board so that you can be able to note down the points, so that you can get more confidence in writing the theory in examination. Take a screenshot, then I'll explain the points. So now I'll explain first of all who is an auditor and discuss about auditors for different forms of business. First of all, who is an auditor? An auditor is a person who carries on the work of audit. The audit means examination of the books of accounts. The examination of the books of account is called the audit. The person who conducts, who performs the function of auditing is called an auditor. An auditor may be a person, or an auditor may be a company of chartered accountants. In India, the auditors are the chartered accountants who are the members of ICAI, Institute of Chartered Accountants of India. So these persons are called the auditors. They perform the functions of audit. Now, discuss about the auditors of different forms of business organization. We have different forms of business organization like sole trading concern, partnership business, or limited liability company. Now, one by one we'll discuss. What about the auditors of sole trading business? It is not mandatory for a sole trader to get their accounts audited by an auditor. It is not compulsory. But when the business expands, when the business is large, then it is necessary for the sole trader to get his books of accounts audited by an auditor for his own purpose. But according to some laws, if the sole trader's business expands over a specific limit, then compulsorily they have to get their accounts audited. But otherwise, normal circumstances, it is not compulsory for the sole trader to get their accounts audited. Then what are the rights and duties of the auditor of sole trading concern? He has to apply due diligence in applying his professional work of auditing the accounts. He has to check the errors. He has to bring to the notice of his client regarding what are the deficiencies in accounting. Similarly, he is having the right to check, verify all the accounts. He is having the right to get clarification from the from the clients regarding different points. These are the rights and duties of auditor. Secondly, auditor of partnership firm. In India, the partnership firms are governed by Indian Partnership Act 1932. Again, it is not mandatory for the partnership firm to get their accounts audited. But when the business expands, when the partners does not have full control on all the transactions of the business, then in that case it is better for the partnership firm to get their accounts audited. Similar, just like in sole trading concern, partnership firm accounts are also not compulsorily to be audited, but for their own sake they will get their accounts audited. Then the powers and duties will be same, just like the auditors of sole trading concern. The auditors has to apply due diligence in performing his duties regarding the audit of accounts. The auditors are expert in the field of accounts and auditing. So they have to apply the due diligence, and apart from that they have the right to get the clarification from the clients, and they can verify all the accounts. They can inform the clients regarding the deficiency in accounts. All these things. Next comes audit of limited companies. The most popular form of business organization is limited liability companies or joint stock companies. Statutorily, it is required to conduct audit for companies. So here in India, we have Companies Act 2013. So according to Companies Act 2013, compulsorily every company must get their accounts audited by the auditors. So how the appointment of auditors, the qualification, disqualification, qualities and rights, duties, all these things are specified by the Companies Act 2013. So these are the provisions regarding the appointment of auditor, the auditors of different forms of business organization. Now I am coming to the main point, appointment of auditors. The Companies Act 2013 has given elaborate provisions regarding the appointment of auditors under section 139. So the rules related to appointment of auditor under section 139 of the Companies Act 2013 are stated as follows. So under what circumstances, how the appointment of auditor of a joint stock company will be done? First of all, first auditor. The very first auditor of a joint stock company, who will appoint, how he will be appointed. Now the provisions I am explaining. According to section 139, subsection 6 of the Companies Act 2013 states that a company needs to appoint the first auditor by the board of directors within 1 month from the date of registration of the company. When a new company is formed, so within 1 month from the date of incorporation of the company, the first auditor must be appointed by the board of directors. The first auditors will be appointed by the board of directors within 1 month from the date of incorporation of the company. Such an auditor will be having the post up to the first AGM. AGM stands for Annual General Meeting. The first auditor will hold the position of auditor up to the end of first AGM, Annual General Meeting. In that AGM, a new auditor may be appointed, or he may be, reappointed. The existing auditor may be reappointed, or a new auditor will be replaced at the first AGM, first Annual General Meeting. So what are the rules regarding the first first auditor? The first auditor will be appointed by the board of directors within 1 month from the date of incorporation of the company. The first auditor will hold the position up to the end of first AGM, Annual General Meeting. In that Annual General Meeting, the old auditor will be reappointed again, or a new auditor will be appointed in AGM. Secondly, subsequent auditors. That means after first auditor, the subsequent auditor, how he will be appointed. Section 139 subsection 1 states that every company must appoint an auditor or auditors at every AGM, Annual General Meeting. One meeting of shareholders will be conducted every year according to the provisions of Companies Act 2013. So every year one meeting of shareholders will be conducted, that is called AGM. In Annual General Meeting, the auditors are appointed by the shareholders. So actually the power of appointment of auditors is in the hands of shareholders in the AGM. The appointed auditor must be informed within 7 days of such appointment. As soon as the appointment of a new auditor taken place in the AGM, the auditor should be informed within 7 days from the date of appointment. The company must file notice with the registrar about the appointment of auditor within 15 days of the meeting. Within 15 days of conducting the AGM, the notice of appointment of auditor must be submitted with the registrar of companies. Now, compulsory reappointment. According to section 139, subsection 9, every retiring auditor must be reappointed. So one provision is given in the Companies Act that every retiring auditor has the right of being reappointed again, except under the following 4 conditions, he will not be reappointed. So normally the auditor will be reappointed again in the annual general meeting, provided these exceptions are not there. What are the exceptions? When the retiring auditor is not qualified for reappointment. When the retiring auditor is not a qualified person now. Earlier he was qualified, but now he has become disqualified. Now if a auditor has become disqualified, then he cannot be appointed as an auditor. Second, when the retiring auditor informs or intimates the company in writing his desire to discontinue or unwillingness to be reappointed. So in the AGM, the existing auditor has expressed his unwillingness not to continue as an auditor. He does not want to hold the position of auditor. He has expressed in writing. Then again, he will not be reappointed. Then third one, when a resolution is passed at the AGM, annual general meeting, expressing that he would not be reappointed or someone else is being appointed in place. In the annual general meeting, a resolution is passed by the shareholders that existing auditor should be replaced by a new auditor. In that case, when resolution is passed, automatically the old auditor cannot continue as an auditor. A new auditor will be appointed. Lastly, in case of death or incapacity or disqualification, in these circumstances, the existing auditor cannot be reappointed. Remaining cases, normally the existing auditor will be again reappointed in the next AGM. Next, appointment by central government. Sometimes, if the company fails to appoint the auditor, the central government can give order to the director, to the regional director, to appoint a person as a director, as an auditor of the company. So, section 139, subsection 5. This states that if in case the company fails to appoint an auditor at its AGM, the central government, when they will appoint, if the company fails to appoint an auditor in the AGM, then central government will have the right to appoint the auditor. So then the regional director, according to the instruction of central government, needs to appoint an auditor in order to fill up the vacancy. So if the shareholders have not appointed the auditor in the AGM, then central government will pass the order to appoint an auditor. Next, appointment for casual vacancy. So when the casual vacancy will arise, section 139 subsection 8 states that in case of death or insanity or insolvency or disqualification of existing auditor. Suppose during the period, all of a sudden the auditor dies, there's a death of the auditor, or the auditor has become insane, or the auditor has become insolvent, or the auditor was disqualified during the year, then this vacancy is called casual vacancy. It is called casual vacancy. So if casual vacancy arises, who will appoint the director? The Companies Act has given the provisions. Companies Act says if casual vacancy of auditor arises, it will be filled up by the board of directors. By the board of directors. So here can appoint a new auditor within 30 days. Vacancy arising as a result of resignation by the existing auditor is not considered as casual vacancy. If the auditor resigns, it is not called casual vacancy. If he resigns, that is not called casual vacancy. That vacancy cannot be filled up by the board of directors. Board of directors can fill up the auditor's vacancy if it is arising due to casual vacancy, on death, or insanity, or insolvency, or disqualification. Next comes appointment by special resolution. Sometimes an auditor has to be appointed by passing a special resolution in the company. So when this special resolution is required, if in a company 25% or more of the paid up capital is held by a government company or state government or bank or insurance company or financial institutions, etc. So a company is required to appoint an auditor by passing a special resolution when 25% or more of the subscribed capital is held either singly or in combination by. That means if XYZ company is there, in this XYZ company 25% or more is held by any of these. Who are holding? A government company is holding, or state government is holding, or a public financial institution is holding. So XYZ company is a limited company. In this company 25% or more subscribed capital is held either by another government company or state government or a public financial institutions, or any financial institution established by any provincial or state act where government has not less than 51% of subscribed share capital. So any other financial institution in which the government holds more than 51% of share capital. Then last one, a nationalized bank or an insurance company dealing with general insurance business. A nationalized bank or an insurance company dealing in general insurance business. So if a company is having 25% or more of subscribed capital by any of these three, or a combination of these three, that company, the auditor will be appointed by passing a special resolution. That's it. So in examination, if a question is asked regarding how the appointment of auditor can be done for a joint stock company, so you have to explain all these provisions under section 139 of the Companies Act 2013. The first auditor will be appointed by the board of directors within 1 month from the date of incorporation, right? Then subsequent auditors will be appointed in every AGM, annual general meeting. So shareholders will appoint the auditors in every AGM. So the auditor should be intimated within 7 days, and the notice of this appointment must be submitted to the registrar of companies within 15 days of the meeting. Similarly, compulsory reappointment. That means the existing auditor will be automatically reappointed in AGM provided these 4 circumstances does not happen. In these 4 circumstances, the reappointment cannot be made. What are the 4? First, when the retiring auditor is not qualified for, if the retiring auditor is not qualified for reappointment, or due to death, insanity, insolvency, disqualification, or he has given a written, the auditor has given a written, a notice to the company that I don't want to continue as an auditor. His unwillingness to continue as an auditor. So in these cases, the existing auditor cannot be reappointed. Now central government can also appoint. If the company fails to appoint an auditor in the AGM, then central government will pass an order to appoint the auditor. Then appointment for casual vacancy. If a casual vacancy arises on account of death or insolvency or insanity or disqualification, then that casual vacancy will be filled up by the board of directors. Last one, special resolution. So an auditor can be appointed by special resolution if in a company 25% or more than 25% is held by singly or in combination by any government company or state government or public financial institution, or any financial institution in which 51% or more is held by the government, or a nationalized bank, or an insurance company doing general insurance business, or combination of these. So in these circumstances, an auditor can be appointed by passing a special resolution. That's all. So these are the points you have to remember for appointment of auditor. The next topic we'll take up in the next video.